Hey everybody, it's Chris Butel with Cleveland Street Mortgage, and today I want to talk about how to shop for a mortgage loan. It seems kind of simple. Most people would tell you, get two or three estimates and compare them, but how do you do that? And that's really where the rub is, because it's a pretty complex set of documents, and there's not a lot of uniformity in terms of how different lenders will present different fees. And so it's really important that you know how to compare different lenders' estimates and what questions to ask and which fees are going to make a difference between two lenders and which ultimately won't. And so that's what this video is about, to try and teach you a little bit about that. And first of all, just get a dated written estimate. Dated because market changes daily, and you do want to get an apples to apples comparison. You want to get rates quoted on the same day, because the market can change significantly from one day to the next. And if you're comparing quotes from two different dates, you may choose the wrong one because the market got better or the market got worse, and that distorts the comparison. So get a dated and then get a written estimate. There again, because there's not a lot of uniformity in terms of how fees are presented, what they're called. It's not really safe or wise to use shorthand or to accept shorthand in terms of the process. Where sometimes I'll ask my clients to send me a competitive estimate, and they'll say, "Oh, they told me it was this rate, and there's only $1,000 of lender fees." And that's a very unaccountable way to present it, to give a quote. First of all, what do they mean by lender fees? What fees are not or are not included in there? And of course, it's far less information than you need to make a wise and informed decision, not only about between different lenders, but about the particular house or how much house you're going to buy. And so get a written quote, get a dated written quote. And then you just want to make sure you also understand what credit score are they assuming. You want to make sure that your lenders are using the same credit score assumption. Credit scores has a significant impact on your pricing. And so if I'm pricing a loan scenario and I assume a 760 credit versus a 700 credit, that's going to be a very different pricing result. And so I want to make sure, first of all, I ask questions. I probably won't know at the very early stages what their mortgage credit score is, because Credit Karma doesn't tell you that, your credit card company doesn't tell you that, your bank doesn't usually tell you that unless you get it pulled in the context of a mortgage application. And so, but I'll still ask questions, and we can usually come up with a reasonable estimate, and then just understand that, hey, this is an estimate. I try and be conservative, but you want to make sure your different lenders are using the same credit score for the estimate. And then you want to make sure that your estimate has a cash to close included in it. You can see here estimated cash to close at the bottom of this form. Make sure that the estimate has a cash to close, and that's just a way of ensuring that the quotes that are being provided to you at least are purported to be comprehensive. Everything is included in there because everything will affect cash to close. Obviously, that's an important number to you as a consumer, but it's also important just in holding your lenders accountable to being thorough in the process. If you're asking them, show me what my estimated cash to close is, you're making them go to the next level and estimate everything in there. Let's go to the next page, and this is really where the nuts and bolts of the process are. Here, page 2 of this is the official loan estimate, and you don't have to get an actual official loan estimate. And if you get a written loan estimate that's in a reasonable format where you can see all the fees, it calculates cash to close, you can compare different formats to one another. Because as long as they're comprehensive, you should be able to pick out the different fees in the different formats and know how to compare them. But here on the loan estimate, page 2 of the loan estimate is where basically all of your fees are going to be listed. And this page highlighted in yellow are what I call differentiators that don't make a difference, or differentiators without a difference. And the reason I call them that is all of these items here highlighted in yellow are going to be the same no matter what lender you choose. Now, that doesn't make them unimportant in the shopping and comparison process. Actually, quite the contrary. This will reveal to you how careful and competent and candid your lender is. Are they diligent? Are they going to be making careful estimates of these numbers? Are they artificially low to make their total cost look lower than the other guy? So you want to make sure that you do compare these, but understand that these are not going to differ between different lenders. They're not ultimately going to make a difference in your actual cost between two different lenders. And some of these are obvious, like, for example, homeowners insurance. You shop for homeowners insurance and you choose who that is. Now, that doesn't mean we should be careless in making an estimate, but that's something that you're going to ultimately determine, and it's going to be the same whether you pick me or somebody else. Property taxes are also another one. They're going to be the same whether you go with my loan or somebody else's loan, but the monthly property tax and the number of months reserves that you have to collect at closing, those are things that are important for you to know up front, and they should be carefully estimated. Now, at this stage, let's say this is early in the stage, you don't have a real house, you're just shopping, it's still going to be an estimate, but you should understand what went into the estimate. Do they have a rule of thumb for property taxes? These things are generally things that are capable of being estimated, or at least understanding what assumptions were used in doing that. And so just know that these things are important, but they're not going to make a difference between two different lenders. Title and escrow. Your title insurance company and escrow company are negotiated as a part of your contract. So they are going to be whoever they're going to be. They're not going to vary depending on the lender you choose. Title fees are regulated by the state insurance commissioner. So this should be very estimable. At least in our state they are. There's not a lot of price competition there. Escrow, there's a little bit of price competition, but not much. And again, whoever you choose for a lender, your title and escrow fees are going to be the same. And then this adjustments and credits. This is prorations. For example, maybe the seller's prorating you some of the real estate taxes or various little things. This is, again, not going to differ between two different lenders. Now let's go to the next page. This is just where I wanted to show you here. This is the, when we're estimating taxes and insurance, it doesn't just affect how much cash you have to close or what your total fees are going to be included in that. It also affects what your monthly payment is. And again, if you're shopping two different lenders and somebody's way estimating, underestimating or misestimating your taxes and insurance, this number is going to be different, even though it's not going to differ between two different lenders. So it affects your cash to close, but it also affects your monthly payment. Now, this next page is these items highlighted in green are differentiators that maybe make a small difference. These are fees that are generally under the control of the lender, but they're not lender fees. These are third-party fees. They don't collect these. They don't make money off of these. But sometimes they'll have different credit vendors or flood certification vendors or appraisal vendors, and they'll charge more or less. So they might make a minor difference, not a huge difference. Still important that they be accurately estimated, but they're not going to be a huge difference maker between two different lenders. Sometimes, maybe a lender is having like we're running a special on a $600 credit against appraisal fees. So that's important, right? And they may make a difference, but they're not a huge differentiator between two different lenders. And then here are the blue items. This is really where the lender makes their money. This is, they have what they call lender fees. Some people call them junk fees. But these are lender fees, and you'll often see them like an underwriting fee or a processing fee. You'll see those, and they're generally under origination charges, Section A origination charges. And then you can have, in addition to that, you can have points that the lender will charge, or you can have a rebate, what they call lender credits. Points are usually the cost of buying the rate below market. So you pay, a one-time extra cost or a point or a fraction of a point to buy the rate below what you'd otherwise get for the long-term benefit of that. Whereas a rebate is you're buying the rate up. You're taking a rate above market, maybe because you don't have quite enough cash. You'd like to conserve some cash for outfitting that new home. So you take a rate above market and you get a credit. And these are probably one of the more difficult to compare. This is one of the easiest ways for if you have a lender that's not that doesn't have an integrity. This is an easy way then to manipulate when I know you're shopping me against somebody else, because at the end of the day, it's very hard for you to keep a lender accountable to the rates they quote. It's not like you're going to call 3 different lenders and then that day you're going to choose and lock, right? That's just typically not the way it works. Usually you're doing this, weeks or months ahead of time. And so by the time you've made that choice and you've gone with that lender, 6 weeks later, the market's moved on and it's a very different market from what it was back when. And it's very hard for you to go back and correlate. So it would be easy for me to artificially understate the rate that I'm offering. Now there's a way to get around that. There's a way to hold that lender accountable, and I'm going to show you that in just a minute. But just be aware of that. But these are where you're going to compare what are the origination charges, what are the points, and hopefully you're comparing the same rate between 2 different lenders. So these fees will be easier to compare, points and rebates. And so you want to make sure that you that you're aware of how these costs are derived. And this is really where that kind of comes into play. I'm going to show you my rate sheet here. This is how you can hold the lender accountable and how you can really make sure that you're getting an honest quote. You can ask for a dated rate sheet from the lender that corresponds to the quote that they gave you, and make them explain how either the discount points or the rebate, the lender credit that they're showing on that form correlates to this rate sheet. And it should be dated. The same day that you're getting the quote, or the same day as the quote purports to be. And it should show you a variety of rates. This is very typical. Every lender should have this. We're required to disclose this information when we send out formal loan disclosures, what's called an anti-steering disclosure. What's the lowest rate you can get? What's the points? Like in this case, this assumes a $100,000 loan amount. I just used that so that it would be easy to calculate what the cost of points would be, or the cost of, the benefit of rebate would be here. But we're required to disclose this. So if this were my $100,000 loan, I'd be required to say you could actually get 2.625 if you wanted to pay $6,200 in points, or you could take a rate as high as 4.625 and get a rebate of $2,500. So a lender will have this, and basically you can say, give me a dated rate sheet that corresponds to the quote you gave me, and show me how you came up with those points or that credit, and make sure that the interest rate corresponds to the rate that they quoted you. And so if you can do all those things, I think that you'll have a leg up, and you'll have a way of evaluating the competence, the diligence, the professionalism, the integrity, and ultimately the comparability of different lenders. And I think that will serve you really well. Thanks so much.